Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up's for an important earnings day today, Thursday, August 3rd, 2023. So, most companies that came out either met or beat expectations. Rather than me go through all the numbers by memory, and I can probably do it, I'm not going to. Suffice to say, Apple, their phone sales down. That's not good, especially in the U.S. It was up a bit abroad, but in the U.S., and the market was down about a percentage point or so. Coinbase got a bump initially, up about 4%, and then it gave it up. Now, the last I looked, it was just up about a penny and 1.5%. We'll see what happens there. Not quite certain. Amazon did jump 6-7%. And in looking at why, they're firing, especially on their AWS, that's their web services, are just exploding to the upside. And they're implementing a lot of changes. They are one of the firms that you're going to hear artificial intelligence all over the place, and you should. Plus, I think their ideas is more, not instead of centralizing, diversifying some of the delivery points to get quicker deliveries to you on certain items, and that seems to be working as well. We saw Bookings.com, their stock jumped very nicely as well. So there were a number. I'm not going to go through every one of them, no need. But the point I'm making is the earnings as a whole keep beating. Now, I'm still of the opinion, doesn't mean I'm right, that we have seen a trade top that has just formed after a prolonged move in July, and that we're going to drift and go into a trading pattern, not a crash, a trading pattern between now well into September. And you're going to say, boy, that's an 8-week projection, and it is. And it ties together, if you think about it, with the next FOMC meeting. Now, I don't think September is going to be when you launch. I think that'll probably be in October if you're going to get a year-end rally, and who knows if you will. This is still August, and here I am talking year-end rally. I'm bringing this up for a reason. I've been trying for 3 days to figure what special report do I want to do that works for both the futures traders and the stock ETF person. I'm going to do stock indices. I'm going to show you the seasonality, just seasonality, 15, 30, 5 years, as to what's going on, going back years, and bringing you up to date, and one line will be on the other to show you what I think is going to happen. I haven't created it. I'm going to begin doing it tomorrow. It'll be out very shortly. So as we take a look at Intel, I was looking, if you'll remember, for this gap to be filled. It has been. Next, you held on the break today, which is good. Higher lows, higher highs, which means the traders are probably looking at the 18-day average of closes, that line in the sand. Let me define that. For the way that I teach charting, market's like a neutral zone. Now, I use the 18-day average, and my theory is this. This is a filter on other technical indicators. When the market is over it, you have a bullish array. That means if other indicators are bullish, this is saying go with it. When you get deep corrections, it's not uncommon to come back there. If you get a break and you come up, it's not uncommon to go there and fight the battle and then determine which way you're going to go. It's super important. A lot of people go, it is. I don't believe they know what they're talking about. Then I look to see where Bollinger Bands are. Why? It's in its simplest rendition. 95% of the time, the market will trade between the upper and lower band. Resistance, support. The more sophisticated is you tie together with it momentum in some manner. I prefer the slow stochastic. You may not. But as we came up in this and we hit this, I know I'm there. The video's there. I said, I think the pros are getting out of the market right up there. And there's a gap in the chart. It might want to go back and fill the gap. And that's exactly what's happened. In the process, you had gotten overbought as you went there, and now you're no longer there. So I think the pros are nibbling on the long side here. I think they'll say, I'm wrong if you get under that low. And I think if they think it can go higher, they'll be looking for something up in the 3620s to the upper window envelope. I know you don't know where the window envelopes are. I show them in my morning subscriber videos, which you can get, by the way. If you're watching me on YouTube, just look at this blue button on the bottom. That's where you sign up. If you want to sign up on our website, which gives you way more features than signing up on the YouTube one, go to iraepstein.com, and under research, they're all there. That's what the three you sign up for. So we were talking just recently of the sideways action that started to form here in Rivian. As the market was coming up, and I'm going back a few days here intentionally, you'll see the market, and I want to get right here. That's where I want to go. You're starting to wrap your arms around the trade, and you're running into the Bollinger Band. Only 5% of the time do you go outside the Bollinger Band and stay there. And now the market's pulling back to where? The 18-day average, looking to see what does it do next here. Are we trending? No. Why? While we have the swing line down, the market is refusing to stay under the 18-day average, so the bias is up. There's that filter on, another indicator. UGA, same thing. You lost the embedded reading. The objective was to get to the 18-day average of closes. Today you missed it by 3 cents. I call that hitting it. Will it hit it tomorrow? It doesn't matter to me. You're close enough where you say, it's good enough for me. You lost the embedded reading. That's often what happens, and now we see if the market can respect it. When you're over the 18-day average, because the bias is up, I typically, the word is typically, there might be changes, I typically don't tell traders to go short. I tell them to get out of longs. There's a huge difference. In XLF, you had an embedded reading. You lost it. You went back to the neutral point. And again, notice how the market's refusing to stay under the 18-day average. It has not thrown out sell signals. It has thrown out signals not to be long. We've seen this over and over in these markets. The identical thing happened in XLI, and look at how narrow these Bollinger Bands are getting. From there comes big trades. The narrower the bands get and the longer the market drifts sideways in them, the bigger the ultimate trade that comes out of it. In the video, for the time being, the momentum is to the downside. And you look at it and see where you're at. Now, if you're looking at the weekly chart, you're still in a bullish mode. But this market acts to me tired. I know you're going to say, Ira, you don't know what you're talking about AI. You can tell me all you want. I'm a chartist. Take the name off it and forget it's NVIDIA. It looks tired. It could easily get a sell signal. I'd be a bit cautious right there. Now, in coin, you got a good piece of news in terms of making money, but they're not out of the woods on any of their legal problems. I have a hard time with traders that want to get there. Would I be telling a trader to go short? I'm going to ask you. What does Ira say when you see that? In unison? Now you got it. Home builders. We thought that we'd pull back here. Notice the narrowness happening. Lost your embedded reading. It's lost its way. Higher interest rates, 7% mortgages, hurting the market right now. And I'm going to repeat, if you look at the curve yield, you are seeing the 10 and the 30 move dramatically to the upside. They're approaching 4.25% now. They were just in the 3.7, 3.8 zone. You realize that. And the 10-year curve yield, which was out to 100 with the two-way here, and they were like this, have reverted to 70. But the surprise is it's the back end. That isn't good for the economy. So we got to see what's going to happen there. You do also know that Warren Buffett announced today that he had bought $10 billion of securities. I'm not talking stocks. I'm talking debt instruments. A week ago Monday, another $10 billion this week, and he said he's buying $10 more billion this coming week. Of course, as interest rates keep climbing, this guy just keeps making more money. And he doesn't go in and buy $10,000. I'm going to buy $10 billion. Wow. All right. Higher lows, higher highs, fully embedded. Now, you've got the meeting going on at OPEC, and the Saudis have committed now to September not getting any increase in production. It's going to get the 1 million barrel decrease, and then they came out and said very clearly that they might even increase that if they don't get the results they want. Now, you have a meeting coming up now. 30 countries have been invited by the Saudis to Jeddah, and they are going to discuss ways to try to put an end to the Russia-Ukraine situation. What they need very little of is the input from Ukraine and Russia. What they need is the input from everybody that's calm and quiet and try to come up with a path for this thing to end. At the end of the day, I promise you, the NATO partners want this to end. And Russia, as crazy as Putin is, probably is saying, to hold on to power, I wouldn't mind this ending. The problem is nobody's going to get what they want if they end it now. That is the problem. The Ukrainians are bound to say they want back their recaptured territory. I don't think they'd get Crimea, but they want the other territory back. Russia's going to say they captured it, it's theirs. And where do you go with all this, all right? The other thing that's happening, they're going to try to get food exports going. How? Did you hear the word how with the funny lips that I just did? If you keep blowing up the ports, which Russia's effectively done, how do you get anything there? Now that what they're doing is they're destroying the ports on the Danube River, that'll leave the roads, and I promise you the roads will be attacked in the end if this war keeps going. Russia's got the missiles. It's got all it needs from North Korea, Iran. It can get everything it wants, and it'll just keep launching the missiles. Today we're showing the Russian economy and the benefits it has done to industry there. Of course, the industry, just like any time else in America, anywhere, if the country goes to war, you're not producing cars anymore. You're producing tanks. You're producing munitions, whatever it is. Money flows, and the economy is doing a boon in that part. You don't believe me? Go on and do some reading on Reuters and Bloomberg. You'll read what I do. In GLD, you can see how the market is down to oversold area at the Bollinger Band. I'll let another guy want to be short. This is where I'd be telling traders you don't want to be short now. Now you want to start picking up the pieces, same in the silver market. You're getting to those zones. If it embeds, I'll change my opinion. You're not there. In the copper, how do we magically fall back to that line in the sand? And that's where the battle is. Amazing as far as I'm concerned. Now, this is where you're seeing the real rates keep climbing. TLT, BND, as they drop, it's because rates are going higher. EFA, you got to pay attention to all those. In the dollar index, first time I'm saying this, I think it's profit time. I said yesterday, I think you're getting up to that area, you're there. The flip-flop is true in the euro. Yes, I'd love to see the Bollinger Band. You don't have to hit it. You're already proving that the 100-day average is a support zone, and you should pay attention to that. Now, because we've had this big drop in the market all at one time, you typically consolidate. You'll go into a chop period. One of the popular tools when that happens is called pivot points. And what a pivot point does is it uses the prior day, and there's a mathematical formula, to find a center line called the pivot. On top of that, traders with the formula will do it. You're going to get sell numbers above it, S1, F2, support. Well, actually, S1s and S2, believe it or not, they don't call them sell. They call them support numbers, S1, S2. And resistance in the traditional way are up here above the market. But they're sell above, buys below. I have found pivot points not as accurate as I wanted them until I learned when to use them, number one. Number two, to tie momentum with them. You don't want to use them on their own. You have this in your charts. If you have a good charting package, you have it. Now, what do you do with it? That's where I come in. Free. I'll teach you how to use it. You'll be able to master this over the weekend. Real easy. And it teaches you how I do things, all right? It's lightweight. It's not as heavy as my outside day course, my enhanced Bollinger Band course, and all that. All you need to do is move your cursor up to the top. You'll see an icon appear, and you can go to our website at iraepstein.com under the word free offers. That's where this particular part is. And just give that, you'll drop down in there, you'll see how it's done, and you can go to the old-fashioned way and call my staff. They'll get it to you. I'm Ira. I'll see you over the weekend. I don't know if I'll do one of these tomorrow night or if I'll do it on Saturday. We'll see. I've got the weekend to do it. And you'll get your weekend edition of everything we're looking at. Trade well. Take care.